I call the honourable member for Whitlam.
Thanks, Deputy Speaker. Pleased to be speaking to the motion. I wish to move an amendment at this second reading stage, which I provide to the clerks. This bill finally implements 4 of the government's long list of unmet commitments from its response to the Banking Royal Commission. This will, when it is finally passes the Parliament, bring the government to a grand total of 10 of 76 of the recommendations that were made by the Hayne Commission into the banking and financial services sector. I'll briefly summarise the effects of the bill and then review each of the schedules before addressing our amendment. Schedule 1 of the bill extends the unfair contract terms laws to cover insurance contracts. Schedule 2 of the bill brings funeral insurance into the general financial consumer projections regime, and Schedule 3 of the bill introduces a best interest duty for mortgage brokers and provides for regulations to reform mortgage broker regulation. Can I address Schedule 1? And can I say, as a preface, Deputy Speaker, it's deeply disappointing that this wasn't introduced into the House before Christmas. Labor has long communicated to the government that they will have our every cooperation in ensuring that the Hayne Royal Commission recommendations into the banking and financial sector are implemented post-haste. And we'll do whatever we can from a parliamentary sense to ensure that those bills can be debated early, improved where necessary, and moved from this place to the other place and enacted. And we do this because we take the view that the consumers of Australia rely upon it. We also make the observation, Deputy Speaker, that many of the recommendations, in fact most of the recommendations of the Royal Commission, were not new to government. And I'll go to that point when addressing the unfair contract terms, which are subject to one of the schedules before the House. And given that they're not new to government, the government should have already implemented most of these recommendations. Work should have been well underway. So it's regrettable that here we are in the first session of this year, and we are only now debating this legislation. But it's regrettable for a second reason. Any Australian government can predict that between October, November, December in this country, we are approaching, with great sadness, the period of natural disasters, whether it be floods, whether it be cyclones in the north, whether it be bushfires, as we have tragically seen through the summer of 2019-20, or as we've seen in our nation's capital, devastating hailstorms, all too frequent throughout the summer months. It is a very predictable phenomenon. So against that backdrop, you've got to ask yourself, why would any government delay the implementation of legislation which improves the handling of insurance claims that we can predict with calendar certainty are going to increase after the summer period? We can predict it with calendar certainty that that is going to occur. As you move through the flood season, the bushfire season, the hail season, you know that those insurance claims are going to increase. And this schedule deals with applying unfair contracts terms to the insurance contracts, Deputy Speaker, providing consumers with additional protections as and when they need to make their claims. Now, any responsible government would know that insurance customers are going to need those protections as we move into the natural disaster season. They're not there, they haven't been there. That's bad enough. But the fact that the government in the last week of Parliament scheduled or indicated that they were going to introduce this legislation into Parliament, but they chose not to. They chose not to. What was more important? What was more important to the government than implementing these recommendations that were going to protect insurance consumers? What was more important to them was introducing the already once failed union-busting ensuring integrity bills. It was a stunt, a very costly stunt, which is going to cost insurance consumers dearly. So if you're struggling with the terms of your unfair contract, your unfair insurance contract, if you're struggling with the insurance claims management process and you're wondering who to blame, you need look no further than this mob over here. Look no further than this mob over here, because they were too interested in playing political parlour games and not interested in enough in implementing the recommendations of the Hayne Royal Commission into the banking and financial services sector, recommendations most of which have been sitting in government's laps at least since 2016. Let's deal with Schedule 1 of the bill. Schedule 1 of the bill brings insurance contracts from the Insurance Contracts Act 1984 into the unfair contracts regime established under the ASIC Act. Many businesses use standard form contracts which are set out on a take-it-or-leave-it basis, whether it's in the real estate sector, a tenant taking out a new tenancy, Deputy Speaker, whether it's in the purchase of a motor vehicle, were all too common in the insurance contracts area. These are standard contracts. It's not as if the average consumer sits down with their insurer and negotiates line by line the terms of the contract. They're a standard form contract. Here it is. Sign on the dotted line, pay your premium and you have cover. Deputy Speaker, this is a reasonable and appropriate business practice when you are dealing with high-volume contracts, but it leaves customers with no power to negotiate with businesses if elements of a standard form contract are unfair. This is why, in fact, Labor introduced unfair contracts terms regime in 2010 to protect consumers from exploitation and unfairness. Under the regime, terms in standard contracts are nullified if they are found by a competent judicial authority to be unfair. This provides powerful protections to consumers from exploitative business practices. But until now, insurance contracts have been exempt for the most part from this regime. These reforms have been a long time coming. It was highlighted as an issue by Commissioner Hayne in his final report back in February last year, which recommended that unfair contract terms be extended to cover insurance contracts. But that wasn't the first time that this recommendation has been made to government after thoroughgoing research and consultation with industry. It was indeed Recommendation 6 of the Australian Competition and Consumer Commission's interim report into the Northern Australian insurance in 2018. It was Recommendation 3.1 of the 2018 Parliamentary Joint Committee on Corporations and Financial Services, a bipartisan report into the life insurance industry. Indeed, in 2017, a year earlier, the Senate Economics Committee conducted an inquiry into the general insurance industry, and at Recommendation 11 they made a clear recommendation to government on exactly the same thing. And we can go back to the 2017 Australian Consumer Law Review at Proposal 10, exactly the same recommendation. So I simply ask this, Deputy Speaker, given that the Coalition has had report after report after report, recommendation after recommendation after recommendation, why is it that it has taken till today for these amendments to be introduced into the Parliament and debated? A 2012 government report estimated that from the available data on insurance, the cost to insured, the cost to consumers, that is, the 2012 government report estimated that the cost to consumers was somewhere in excess of $10 million a year. The failure of the government to act on report after report, on recommendation after recommendation, The cost to consumers, $10 million a year. That may be pocket change to those opposite, but to consumers who are struggling with the devastation of a bushfire, their properties are devastated by flood, their cars or premises wiped out by hailstones, that is real money that they need in their time of need. We also know that this $10 million is probably at the bottom end of estimations, because most detriment is likely to be underreported. Consumers often fail to claim, consumers often fail to report issues. Since 2012, we have only seen, Deputy Speaker, the intensity of floods and the intensity of bushfires. Deputy Speaker, if we to take these numbers as given, Australian insurance customers have suffered at least $20 million in detriments from unfair contract terms, while the coalition government has sat on report after report after report, recommending they take action while no action has been taken. This means that while this government has been busy wasting parliamentary time on bills aimed at tearing down workers' protections and workers' rights, Australian families have been left helpless in the face of unfair contract terms. Deputy Speaker, we need a better approach. We need the government to take a serious, concerted, workmanlike approach to the implementation, not only the Hayne Commission recommendations, but the series of reports that have recommended the same thing. These new laws are welcome. They'll bring insurance contracts into the unfair contracts terms regime, but there's some sensible further refinements that are needed to address the unique issues relating to insurance contracts. And terms that define the main subject matter of the insurance contract will be excluded from the regime. Terms determining the upfront prices, excesses and deductibilities will be excluded where they are disclosed in a transparent manner. The utmost duty of good faith will be unaffected. The utmost duty of good faith, which applies by both statute law and common law to insurance contracts, will persist. These refinements, however, will ensure that insurers can offer insurance contract with the knowledge necessary to set prices and assess risks, while consumers are protected by the new features of the regime. Deputy Speaker, I want to go to Schedule 2, which deals with funeral insurance. And Schedule 2, Deputy Speaker, is the subject of my second reading amendment, which I formally move. Schedule 2 of the bill ensures that the consumer protection provisions of the Australian Securities and Investment Commission Act 2001 will apply to funeral expenses policies. We are deeply concerned. We congratulate the government on introducing laws which will address this matter. Everything that I have said about the delays in introducing Schedule 1 of this bill apply to Schedule 2 in double force. Because, Deputy Speaker, between the time when Commissioner Hayne exposed the rorts and the dishonesty in the marketing of funeral insurance, particularly in vulnerable Aboriginal communities, the practices have continued. We still see these little value or junk insurance products being marketed to vulnerable people in vulnerable communities. We are deeply concerned that that has persisted for more than 12 months, in fact closer to 2 years since the behaviours were originally exposed by the Hayne Royal Commission. Now, Deputy Speaker, we welcome the fact that laws have been introduced, but we have some concerns. And on the 7th of December, the Shadow Minister for Indigenous Affairs and myself wrote to the Treasurer outlining our concerns about the consequences of this foreshadowed legislation, and I seek leave to table a copy of that letter now.
Is leave granted?
Leave is granted.
Leave is
Thank
granted.
you. I thank the Minister. Deputy Speaker, we welcome the fact that legislation is being moved. The amendments do not, and I want to stress this, the amendments do not impact on the treatment of prepaid funerals, which have been operated for in well excess of a century by reputable organisations, including friendly societies, unions and others. They will continue to operate as funeral benefit funds. But I want to distinguish a product which is marketed as funeral insurance from those funeral benefit funds, which will be interrupted by the passage of this legislation. We welcome the change. It's a capstone on a particularly sorry story in our nation's financial history. Commissioner Haynes was withering in his condemnation of so-called financial expenses policies. They're policies that are of little value and may be particularly likely to be sold to Aboriginal and Torres Strait Islander people living in remote and regional Australia. The so-called Aboriginal Community Benefit Fund was one such company, one such fund marketing these insurance products. It's a particularly extraordinary story exposed by the Hayne Royal Commission of a for-profit funeral insurance company marketed as an Aboriginal Community Benefit Fund, but it was neither run by Indigenous Australians for their benefit or for the benefit of their communities. This company is still trading, remarkably. It is still trading as Yulpla Incorporated. It has sold funeral insurance products to Indigenous Australians, which lead to them paying more in premiums than their families could ever hope to claim from the policy itself. Extraordinarily, this company has, until recently, had a direct relationship with Centrelink's Centrepay system, allowing the company to arrange, perhaps with the formal consent, but I wager rarely with the consent of an Aboriginal or Torres Strait Islander person who had available to them the financial advice necessary to ensure that they made a proper decision in respect of that policy. So in a sense, Centrelink's Centrepay system has been incorporated into this great scam. Deputy Speaker, the company has built a business model on exploiting the genuine desires of Indigenous Australians to ensure that their families were not left penniless when they passed away. Now, we welcome the amendments in this schedule and see that they'll put an end to a particularly sorry business model by bringing these policies, these products, within the regulation of the Australian Securities and Investment Commission and ensuring that they will be dealt with as if they were any other financial product. It will end the business model which has allowed this exploitation to persist. Labor wants to ensure, Deputy Speaker, that approximately 19,000 policyholders who bought funeral insurance on the basis of these dodgy marketing practices will not be left in limbo. We do not want to see these Aboriginal and Torres Strait Islander Australians being ripped off twice. Deputy Speaker, this was the subject of the letter which I have tabled that the Shadow Minister for Indigenous Australians and myself have written to the Treasurer. We think a proactive approach is needed to ensure that these vulnerable Australians do not get ripped off twice. We are very keen to work with the government to ensure that such arrangements can be put in place when and if they are necessary. Can I address Schedule 3? Schedule 3 of the bill introduces a best interest duty for mortgage brokers that will ensure that consumers' interests are prioritised when a mortgage broker provides credit assistance. This will mean a duty will apply in relation to the provision of consumer credit assistance. The policy also provides a regulation-making power to regulate mortgage broker remuneration. The draft regulations set out by the government require that the value of the upfront commissions to be linked to the amount drawn down by borrowers instead of the loan amount. It is often the practice, Deputy Speaker, that somebody purchasing a house, let's just say, for argument's sake, a $500,000 house with a, let's say for argument's sake, a $400,000 mortgage, may increase that mortgage by another $20,000, $30,000, $40,000 to pay for other expenses associated with the moving into the renovation or the furnishing of that property. Deputy Speaker, they may not spend all of that money at once. Under previous arrangements, Deputy Speaker, a commission available to a mortgage broker may be available up front on the full value of that mortgage, whether or not it was drawn down on, ever or within a certain period of time. Deputy Speaker, the amendments set out in the schedule make sense and we support them. The draft regulations also ban campaign and volume-based commissions and payments, together with capping of soft dollar benefits. I've spoken about the drawdown phenomena and how commissions have been paid. The regulations, the draft regulations also amend the period over which commissions can be clawed back from aggregators and mortgage brokers, limiting it to 2 years, and passing on this cost to consumers will be prohibited. We support the reforms. We do note that the Productivity Commission has found the competitiveness of the Australian home loan market is now dependent on mortgage brokers, and this is an important point. Not a point fully ventilated through the Hayne Royal Commission, relevant to another observation I'll make. Deputy Speaker, a few years back, less than half of all mortgages written in this country went through a mortgage broker. At the beginning of the Hayne Royal Commission processes, it was probably around 50 to 55%. Today, and it's in excess of 60%. That's 6 out of every 10 mortgage loans that are written in this country for a home loan go through a mortgage broker. They are now well integrated into the financing of the home loan market and the housing market, Deputy Speaker, and the Productivity Commission has acknowledged this. We'd like to see more competition in that area. We've said time and time again that we do not think that there is enough competition driving down prices in the home mortgage market, Deputy Speaker. And we believe that mortgage brokers are a key to driving, where properly regulated, are a key to driving more competition, particularly within the home mortgage market. But it's important that we ensure that the reforms that are subject of this bill work as intended. I note that the government has committed to a review of the mortgage broker reforms in 3 years' time. This commitment doesn't appear as a part of the legislation. Labor won't be blocking the passage of this bill, but we will be ensuring that this review takes place as promised. I do want to say something about Commissioner Hayne's recommendation on the future structure or the business model around mortgage brokers, Deputy Speaker. Commissioner Hayne recommended that the commission-based financing or the commission-based business model for the mortgage broker market be ended. Deputy Speaker, the government has taken a different approach to that. This bill does not contemplate at this stage the implementation of that recommendation. I think there are sound reasons for hastening slowly in this area. As I've already said, 60% of the mortgage market, 60% of the mortgage market is now written through the mortgage broker system. Labor agrees with the government to the passage of these bills and not implementing that recommendation which would ban commission-based payments at this stage. But mortgage brokers are on notice, Deputy Speaker. Mortgage brokers are on notice that the system has to work, and it has to work in the interests of the customers that they represent, not the financiers whose products that they are facilitating. And if it emanates over the period of the next few years, and if evidence comes forward that that is not the case, Deputy Speaker, then we will be ensuring that those remuneration arrangements are subject to the review as recommended by Commissioner Hayne and contemplated by the government, and in fact guaranteed by the government, Deputy Speaker. So we commend both my amendment, the amendment which deals with the subject matter of funeral insurance, together with the bill, to all members of this place. It is important that the government get a giddy up on in implementing the Royal Commission recommendations, Deputy Speaker. When this bill passes before the House, as I hope it does swiftly and goes to the other place, hopefully is passed before this sitting fortnight, Deputy Speaker, we will still have only met a grand total of 10 of the 76 recommendations of the Hayne Royal Commission. And I think the community expects that we would have done much, much more than that after over 12 months since those recommendations were handed down, particularly when you consider that the vast majority of those recommendations had been presented to government, sometimes not once, not twice, not 3 times, not 4 times, but in some cases close to 10 times those very same recommendations have been made to government. So with these observations, I commend the motion and the amendment to the House.
I thank the member for Whitlam. Is the motion seconded? The honourable member for Scullin.
I second the amendment and reserve my right to speak, Deputy
Thank the
Speaker.
member for Scullin.